Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Tuesday morning. It's a truncated week for the markets, but one there where we have to digest quite a few cues coming in. When it comes to the data, US GDP data, India GDP data, and of course we'll have the exit polls as well that we will have to digest. Perhaps that could provide some direction to an otherwise lackluster market. But of course, we'll be discussing all the cues for trade, all the stocks in focus today. And of course, we'll be taking up all your stock related queries with our technical expert on the show. So if you have any queries, send them in to us on our YouTube feed and we will try and address them as well. But before we move any further, as usual, let's take a look at the top headlines at this hour. Wall Street closes on lower on Monday after a 4-week gaining streak. Meanwhile, Asian markets trade mixed with the GIFT Nifty suggesting a higher start for the Indian market. Oil prices fall with Brent crude around $80 a barrel ahead of the OPEC meet later this week, which is largely expected to extend production cuts into 2024. In fact, higher crude stockpiles in the US have also put pressure on the prices. Plenty of stocks in focus this morning. Berkshire Hathaway exits entire stake in Paytm. Honasa refutes reports of ESOP sale worth 150 crore rupees, and MapMyIndia approves fundraise via QIP issue of 500 crore rupees. Also in focus will be automakers like Maruti and M&M, as automakers are planning to hike prices from January to offset rising input costs. Record demand for Tata Tech IPO as it gets subscribed by over 70 times the shares on offer. All eyes will now be on the share allotment that will be finalized today. Meanwhile, IPO Street continues to bustle with activity with 7 listings, 5 IPO launches slated for this week. And SEBI does not approve widely anticipated voluntary delisting regulations, citing insufficient data. Meanwhile, the regulator is working on a roadmap for same-day settlement of trades by March 2024, followed by an optional parallel system for instantaneous settlement. Well, on that note, let me bring on board our technical expert for today. Joining me is Sachitanand Uttekar, who's the VP Research, Derivatives and Technicals at Trade Bull Securities, joining in this morning. Great to have you on the show, Sachitanand. If you look at what's been happening with the Nifty, I mean, we've been stuck in a range, not going anywhere. Last couple of weeks, we have been, largely around that 19,800 mark. But this week, we have quite a few cues to digest. We have the monthly F&O expiry on Thursday as well. Do you expect, markets to remain range bound, or do you think there could be some movement on the higher side from here?
Good morning, Nandita, and thank you for having me on the show. Clearly, if you look at last week's performance, yes, we saw Nifty, oscillating within a particular, tight range. But if you look at the data, it clearly suggests that sooner or later we will have a price expansion. And probably, we may see a cluster breakout, getting shaped up during this particular week itself. So if you look at the Nifty itself, despite of the narrow range bodies last week, we saw it holding above its 5-day exponential moving average well, which is placed somewhere close to around 19,970. And since then, we have seen that the daily ADX has been moving up gradually. So it has been sustaining about that 28 mark, and probably we may see that this particular setup unfolds into a good strong breakout. So we are expecting that eventually Nifty would surpass that 19,900 mark, and we may see Nifty scaling towards 20,120 during this particular series itself. So we are optimistic when it comes to Nifty. We had seen some underperformance from the Nifty Bank. It was struggling for the last 3 weeks. But last week we saw, a very good, strong positive close. It maintained its tail, above that 200-day exponential moving average, which is placed somewhere close to around 43,300. We saw a good affirmation of that particular support, and on the weekly closing basis, it has managed to cross its 20-week exponential moving average. So it's rather a very positive, closing. Even if you look at its weekly RSI, it is about to breach that 50 mark. So I think the leadership can come from the banks, which was underperforming. And we may see, Nifty Bank as well scaling towards 44,000, 44,400. So we are optimistic on the market. And I think it's better to, leverage your positions on the long side, keeping a stop loss somewhere close to around 19,720 on a closing basis.
All right, looks like the next leg of leadership could come in from Nifty Bank. Of course, we saw the Nifty Bank index make a very, make an attempt at recovery in the last two sessions, of last week. But hold that thought, Sachidanand. We'll talk about specific stocks, and we'll also be taking up our viewer queries after, I touch base with our fundamental expert on the show. So joining me this morning is Ashutosh Mishra, who's the head research institutional equity at Ashika Stock Broking. Great to have you on the show, Ashutosh. As usual, I want to get in your thoughts on the PSU insurance pack. Of course, we saw the likes of GIC, RE, we saw New India Assurance, LIC as well, clocking in a very sharp surge on Friday. Any particular trigger, given the fact that, we've seen numbers not being that great in the second quarter. In fact, New India Assurance saw weakness from all around its segments, right? Earnings were unenthusing. In fact, LIC, we saw a 50% drop in profit in the second quarter profit. So particularly on Friday, any trigger for the rally that we saw in some of these PSU insurers?
Thank you, Nandita, for calling me on the show. So the trigger point which was there on the Friday was basically discussion among the investor that many political parties are now promising the health insurance coverage for all the citizens in respective states. And if that happens, probably these business will flow to the PSUs rather than going to any private and especially to general insurance companies out there. So this was the first trigger for the New India and GIC that a large chunk of new business can flow. And if you look, health insurance business is a quite profitable business from a general insurance perspective compared to the motor. It is relatively better. And if such a large chunk of business start flowing in, that can be the positive flow. So that was the first reason where the stock got triggered out. And subsequently, part of the market may think that something is happening on the PSU's insurance front, and LIC also participated there. There was no specific news for the LIC as such, but yes, there was a discussion among investors regarding the different political party taking a stance that to extend the coverage of insurance among all the citizens of states.
Right. Could this also be a result of sector rotation, given the fact that we saw RBI cracking down on consumer loans, right? Do you think a lot of money is now flowing out of NBFCs into these PSU insurers? Also, valuation-wise, do you see room for further upside, given the fact that most of these shares are still a way off from their IPO prices?
Yes, you are absolutely right. The sector rotation theory can work out here because there's a lot of negative news going around for the banks and financial sector. And in that, banks and lending sector, especially if I say about it, not financial as such, but lending sector part of it. So within that space, insurance was a little bit safe bet. And given the risk reward, where they are currently trading at, it looked like that, good money can be made out of here from the insurance out there. But we need to understand that insurance sector also have their own place, especially life insurance side of it, where we have the fourth quarter impact. We will be seeing it because last year fourth quarter was very bumper because of change in the taxation policy regarding the insurance. So annual numbers may not look very good for the fourth quarter for the life insurance company as such.
All right, but any preference among the three, GIC, New India Assurance and LIC?
So New India looks quite good, good to me at this point of time. New India and ICICI Lombard, these two companies who look quite good to me. LIC, the biggest overhang on any of these stocks, if we see, is basically government is still way behind their disinvestment target, and we may see that the news coming in that government may go ahead and sell part of the stake in any of these insurance companies where the capital requirement is not as high as bank. So in that case, probably that is the biggest overhang which I am currently seeing is government is way behind their target on the disinvestment, and that risk can come in. So apart from that, I clearly see risk reward looks very favorable, but we need to keep that in mind.
All right, shifting gears then, let's talk about a Paytm. given the fact that we saw a block deal on Friday in this particular stock, and Berkshire Hathaway has exited its 2.5% stake at a loss. Of course, there has been quite a if you may say, a barrage of news flow around this particular company. RBI's crackdown on consumer loans will also impact this company. That's according to brokerages. But recently, this stock has been included in the global MSCI Global Standard Index as well, which could lead to some bit of inflows to the tune of $140 to $160 million. But do you think this bit of news will come as a setback to investor confidence, at least in the short term? Because marquee investors have been exiting this stock, right? If you look at Ant Financial, now Berkshire, and SoftBank has also been paring its stake in this particular stock. What are your thoughts?
So my thought is very clear on Paytm is that we will continue to see a market investor exiting this counter out there. The business has not panned in a similar way like what we have think. Yes, they have turned profitable. The management is trying to do quite a good thing out there, but still the level of profitability which market was expecting between 2014 to 16, many people have entered into this stock. No, they are not going to deliver at least for next 5-6 years. I am not clearly seeing that. No, they can be profitable, but they will not be very usually profitable company, at least at this point of time. So given that, we may continue to see some marquee investor taking exit at every given opportunity, and that will really keep this stocks very sharp upward movement restricted from current level.
All right. And, lastly, Honasa Consumer, this stock has been the talk of the town. In the last 2 sessions, we have seen a rally in excess of 35%. It has got the vote of confidence from Jefferies, and the earnings have been pretty good. So going forward, of course, there was news flow that there could be a block deal in the counter wherein we could see an ESOP sale of 150 crore rupees or thereabouts, which of course has been denied by the company. But looking at the fundamentals of this particular company, it's a new listing, of course. Any thoughts? Would you concur with Jefferies' view?
So when we have interacted with many institutional investors regarding this company, so IPO response was not so good from the retail HNI part of it, if I say, as good as what other many IPO are attracting at this point of time. But institutional side, people are quite looking at that this company can really disrupt, already disrupted few segments and can have capability to take it further out there. From that perspective, yes, future prospect looks good. But any IPO company, normally I tend to avoid for the first year, because we see a lot of adjustment, at least for 1 year, and then probably the real sense emerge out, how really in the long term the price valuation move out from there. So keeping that in mind, I will also wait for a year to complete for the listing of this company before taking any long-term call on the company.
All right, wait and watch approach on Honasa. With that, Ashutosh, thanks a lot for taking out time and joining in and sharing your thoughts with us this morning. Always a pleasure.
Thank you.
With that, let's go back to Sachidanand, and of course, I want to discuss the brokerage call of the day with him, BSE. Jefferies has initiated, a buy call on this particular stock, sees an upside of 24%. It believes that Indian exchanges are benefiting from financialization of savings and also the rising equity participation. It believes that, of course, the relaunch of the BSE Sensex contract as well as BankX could aid, of course, earnings going forward. And, it can deliver 150% jump in earnings in FY24 itself and double it over FY24 to FY26. These are the thoughts coming in from Jefferies this morning. Sachidanand, over the last few sessions, we've seen BSE come under some bit of profit taking after the multifold jump it has seen, if you look at the last 1 month and 6 month charts. But 24% upside from current levels, would you concur with that? Do you see more upside, or do you think the upside will get reignited, or do you think it could continue to see some bit of profit taking in the near future?
Well, Nandita, in fact, when the stock started performing, it formed a base at around 550, 530 kind of a zone. And since then, it has always respected its 20-day exponential moving average. Even the recent correction that we saw from the levels of 2475, that particular correction has been observed, and probably we may see prices getting stabilized near to this particular support of 20-day exponential moving average. which is placed somewhere close to around 2050. So as of now, I think structurally there are no second thoughts that it is locked in into a very strong bullish secular trend, and every decline would be a good opportunity to accumulate this particular stock in one's portfolio. So far, if you look at the weekly, charts, there are signs that there is some bit of exhaustion here, but I think the correction has already been taking place. So until unless we don't see this particular stock, closing below that 2040 mark, below its 20-day exponential moving average on a weekly basis, I think the momentum should continue on the higher side. We may see it forming a base here, and again, there could be a lift off. But as of now, it's better to accumulate the counter, not to chase not to chase momentum and be aggressive. I think declines should be bought in. Once the price starts stabilizing here, probably it may form a good base. So keeping a stop loss somewhere close to around 2040 on a weekly closing basis, one can accumulate.
All right, buy on dips is the kind of approach one should adopt and not chase the momentum when it comes to BSE. Before I take up queries, I also want to get in your thoughts on a MapMyIndia. Of course, the company has approved a fundraise worth 500 crore rupees via a QIP issue. This stock, backed by Mark Mobius, and of course has literally doubled in the last 6 months. Do you see a trade here now on MapMyIndia?
Well, the volumes are always, inconsistent here. But if you look at the price performance, it has been trending very well into a high top, high bottom sequence. The recent base is placed somewhere close to around 2100. So keeping a stop loss there, one can, try to build in some long positions. Somewhere close to around 1880, we saw a breakout from a rounding formation and accumulation zone. And post that, the sequence has been maintained very well. So keeping the price pattern target of somewhere close to around 2780, one can look at accumulating this particular stock from a long-term perspective. The stop loss should be placed at around 2120.
All right, 2120 is where the stop loss should be placed at for a MapMyIndia. DLF, this stock will be in focus. We've seen realty stocks, they've been on a tear. DLF gained in excess of 10% in the last 1 month. But off late, the rally seems to have fizzled out a little. And of course, there is negative news flow around the company that the ED officials have conducted searches at its offices in the Supertech money laundering case. Could this come as a little bit of a setback, and could we see some bit of weakness to continue going forward? Some bit of profit taking is already happening in this particular counter. Weakness to sustain? What are the charts saying?
Well, after a 4-week, vertical rally, there were signs, developing that the momentum could get, extinguished, and probably we may see some exhaustion here. If you look at the daily RSI, since the beginning of last week, we saw it showing a diverging trend. If you look at 640, the hurdle looks very clear unless we don't see a closing above this particular level. There could be selling pressure here or profit booking pressure. We may see this particular stock again, sliding back towards 615, 610 kind of a zone. So it's better to avoid, chasing long positions here, and one can adhere to a short-term, sell call. A trade can be initiated on the short side, keeping a stop loss somewhere close to around 638 on a closing basis for a positional target of around 610.
All right, those are the levels to watch out for on a DLF. But with that, let's start taking up some of the queries that are trickling in this morning. Starting with Som Mendigar wants to understand if it's a good time to enter into Bajaj Finance. There has been a slew of bad news surrounding this company. First RBI banning 2 of its products, then RBI's crackdown on consumer loans. At this juncture, would you advise investors to avoid this stock, or do you think the weakness on charts is actually an opportunity to enter into this one?
Well, looking at the monthly setup, we have already seen a very strong breakout from a 2-year cluster. The base of this particular pattern is somewhere placed around 5,600. From there, we have seen a good lift off and then a correction here. If you look at its monthly ADX, it is about to close or swing towards 25. So I think this correction is a good opportunity. We may see further legs on the lower side somewhere close to around 6,700, 6,800 would be an ideal zone wherein some aggressive long positions can be considered. But keeping in mind, the potential of this particular company, I think every decline would be an opportunity. So unless we don't see it, closing below 63.40, the entire larger degree structure remains very positive. So I think this is a good opportunity. The stock is now again trending near its 200-day exponential moving average. Further slippages towards 6,700 should be utilized to add on to long positions.
All right, hope that answers your query. You should use this weakness to, accumulate for the long term. With that, let's take up a query on JSW Energy. Naveen wants to know whether it's a good time to enter into this particular counter. We also have a query on another JSW firm, JSW Infra. Your thoughts, Kishore wants to know your thoughts on a JSW Infra. From among these two, anything one should look at, because at least JSW Energy has been in a steady uptrend.
Certainly, yes. In fact, infra, we don't have much of the price action to really comment on. But if you look at JSW Energy, the stock has been, forming a very strong sequence on the bullish side. We have already seen a good strong breakout from a rounding bottom formation at 350. Post that, we saw a vertical move, then again a correction, and again a consolidation breakout. So purely, this looks like a continuation of the uptrend. We are looking at a price target somewhere close to around 530, and I think even here the structure looks very confident unless we don't see the stock closing below 375 levels on a weekly basis. The structure remains intact on the bullish side. So keeping a stop loss there, he can still accumulate the counter. Even chasing momentum is always advised in this particular counter. The pattern target is placed somewhere close around 530.
All right, that's the view. Hope that answers your query. But the next one is coming in from Maheshwar Bahanu. Wants to know your thoughts on Akzo Nobel. He says that the stock has lost most of its gains in the last 6 months. Is it worth holding on or adding more for medium to long term? What would you advise him to do?
Well, it's always a very slow and steady mover. If you look at the monthly charts, there is still no very strong evidence of a change in trend. Recently, we saw a good price correction. Again, it has respected its 20-month exponential moving average, and it is trying to form a base somewhere close to its 200-day exponential moving average as well. So probably, we may see some more time-wise consolidation here, and the up move may continue and resume towards 3,000 levels. So I think it's better to hold on to the counter, keep a stop loss somewhere close to around 20 to 40 on a closing basis.
All right, that's the view then. Hope that answers your query. The next query is coming in from Urva Patel, and she wants to know your thoughts on a Lalpath Labs. This stock has seen a good rally on Friday, but on a 5-day basis, it stands to lose. Any thoughts on this particular stock from the diagnostic space?
Well, we are optimistic on this particular space, and we have recommended this stock to our clients from a long-term perspective as well. Recently we saw it breaking above that 2,500 mark. It also formed a very strong base at 2220 near its 200 weekly exponential moving average, and from there, since then, it has seen a good, strong sustainable rally. So even right now, if you look at the price performance, it purely looks like a continuation flag formation. So we are optimistic. Even in the near term, we expect the stock to scale towards 2930 kind of a zone. Keeping a stop loss somewhere close to around 2580. Even long positions are recommended here.
All right, long positions are recommended on a Lalpath Labs. Hope that answers your query. We're running out of time, but just about managing to kind of squeeze in as many queries as I can. This one is coming in on a PFC from Vijay. What are your long-term thoughts on this particular stock? Do you expect the likes of REC, PFC to head higher, or do you think there could be some bit of profit booking? Also, we have a couple of queries coming in on REC from Funny PG as well as Zebu K. So from REC, within REC and PFC, any thoughts as to which one is looking much better on the charts?
I think both the counters are showing a very similar trend. For the last few trading sessions, we have seen a negative divergence in REC. So probably we may see a correction coming through towards 320, 315 kind of a zone. I think that will be an ideal level wherein the stock can be reconsidered. It has been moving away from its short-term averages, as well as if you look at the weekly 5-week exponential moving average, which is placed somewhere close to around 320, and the price action right now is around 340. So there is a fair amount of distance. So probably we may see these stocks cooling off, and on a correction, probably he may consider PFC. I would rather avoid REC as of now. But PFC somewhere close to around 300 would be an ideal, stock to accumulate.
All right, last query for the day coming in from Ashok Kumar, wants to understand your thoughts on Ujjivan Small Finance Bank. It's close to 52-week highs, rubbing shoulders with that level of 6140 or thereabouts. What are your thoughts here?
Well, the base, the recent base is somewhere close to around 48. So unless we don't see it closing or trending below this, the consolidation looks healthy. So he can continue holding on to this particular counter. Even on a further decline towards 52, he can accumulate. The stop loss should be placed at around 48 on a weekly closing basis. And sooner or later, when we see the entire banking, pack performing, this particular stock may scale towards 67, 68 levels. So I think he can accumulate this particular counter on a decline, keeping a stop loss at 48.
All right, that's the view on Ujjivan Small Finance Bank. Hope that answers your query. And we come to the end of this query segment on that note. But Sachidanand, before I let you go, anything you're spotting on the charts by way of recommendations for viewers this morning?
So last week we saw a good performance from the Nifty Pharma pack, and within that particular space, we are liking the setup of DB's Lab. Again, a very strong bullish structure, a breakout from a bullish flag formation, indicating an immediate price target somewhere close to around 38.30. So we are recommending building momentum longs here, keeping a stop loss somewhere close to around 37.30. The other space that we are looking at is the banking and financial space. Within that particular space, we are liking the setup of ICICI Bank. It has managed to, show a kind of an engulfing formation on Friday session. We're expecting a good recovery move towards its 200-day exponential moving average, which is placed somewhere close to around 942. So we are recommending building long positions here. We are expecting some outperformance from this particular counter, keeping a stop loss at 926. Even long positions are recommended here. And ABFRL last week saw a good consolidation breakout. So we're expecting the rally to continue towards 242, and that's why even right now any declines towards 228, 229 zone should be a good opportunity. Keeping a trading stop loss somewhere close to around 225. Even long positions are advised in ABFRL.
All right, those were the recommendations coming in from Sachidanand this morning. With that, Sachidanand, thanks a lot for taking out time and joining in and addressing all our viewer queries, and of course sharing your recommendations as well with us.
Thank you, Nand.
Well, with that, we've come to the end of this edition of Morning Trade. But of course, you don't go anywhere, because coming up next is Opening Bell from me and the entire team. Thanks a lot for tuning in.